Yeah, look, it was an interesting interview. And I think that, as you said, what we've seen from central banks everywhere is that they've become very, very responsive to the data, which when you're confronting shocks like we've had in the last 5 to 6 years, it does make their job really difficult and it creates the higher risk of policy errors. I think what John was saying at the end of the interview there about the importance of creating discussion is absolutely right. I mean, in every single company, from an investor standpoint, we try and revisit the framework that we've created for our portfolio decisions. That's normal, particularly in a time where the circumstances, when the backdrop of the economy or the market
Right.
is shifting. And I think for the last 5, 6 years, that is exactly what we're seeing. The kind of the increase in geopolitical risks, the focus on supply chains, things are shifting really, really rapidly. And so we do need to
Right.
revisit the framework, even if it's just to decide to stick with the same thing.
And you are wonderfully qualified for this question then. Is it just simply that the U.S. central bank has to move towards the heritage of a younger Bank of England where there is more debate and more dissent?
I think that there's a line in the sand there. We don't want to get to a point where there's so much disagreement that actually it's very difficult for markets to get to a point where they know the kind of direction that central banks are moving in. But at the same time, having that active debate, I think is important for investors at this time. We need to try and think through, for example, what is the impact of population growth? The impact of AI, is it going to be disinflation or is it going to be inflationary? These are really, really key questions that we ourselves are grappling with. They're trying to get an idea and understanding of how the Federal Reserve, the Bank of England, et cetera, are considering it, I think is important as long as it doesn't spill into significantly greater volatility, which makes it difficult to understand how your portfolio decisions are going to be impacted.
Seema, we're about to get a new chairman of the U.S. Federal Reserve. How do you think the Federal Reserve will change its behavior, if at all, or its view as to interest rates, if at all, going forward?
Well, so there's two parts of the conversation. There's going to be the cyclical, the short term, and then there's the short. So focusing mainly on the cyclical. So what happens in the next six to 12 months? Just as it always has been, there has to be a focus on what are the economic conditions. So there may be this inclination, for example, as has been suggested, of a kind of a move towards a preference for lower rates. But the economic conditions need to support that. And certainly where we are today with an economy which continues to be really strong, where the labor market has been surprising to the upside most recently, and then of course inflationary conditions both on the consumer side and on the producer side, surprising to the upside. I think it's a really difficult environment for a central bank to be cutting interest rates. So with that in mind, staying on hold and really taking the time to see how this plays out is probably the most likely, which suggests that even with the new head of the Fed, actually the policy impact is going to be quite minimal, at least in the near term.
Seema, given that backdrop here, with all the crosswinds out there for investors to negotiate, whether it's geopolitical issues in the Middle East or Ukraine, we've got the President Trump in China. What's the message you have for your global clients these days?
Yeah, look, as you said, there's a number of different cross currents. So for investors, what we've been pointing to is that, look, we do have confidence in the global economy. We can see pockets of weakness, and certainly there is divergence with the US surprising to the upside, and maybe Europe and Asia certainly more exposed to the negative impact from the
Right.
geopolitical conflict. So global diversification is still key, though. There's going to be companies in Europe and in Asia who are going to be well positioned for this environment, as well as take into account, of course,
Yeah.
that very important secular force of AI. So
Does
it is still a question of global diversification, both region, style, size, and of course asset class, because investors need to be open to the idea that there is a lot of volatility. We don't know what's going to come, so we need to have
right.
that diversification, but also position for strength because the economic backdrop is still pretty resilient.